after the announcement of CPI tomorrow night. How will Bitcoin perform? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. So go ahead and click the link below. After completing KYC and making a $500 deposit, you can choose whether to go long or short, and you'll receive a $1,000 worth of Ethereum position for free. How to do it? Simply click the link below. Register, deposit $500, and complete KYC. And you can choose whether you want to receive a long or short position. You'll be given a $1,000 worth of Ethereum position. This is truly an unprecedented activity. And it's ending soon. Spots are limited, so act fast. Now, let's get back to Bitcoin's market. Actually, tomorrow. Let's switch to the hourly chart. Tomorrow, May 10th, at 8:30 p.m. Alright, let's mark it. May 10th, 8:30 p.m. We'll know the US CPI data for April when this candlestick appears tomorrow night. In fact, CPI data is very important, as the US decides how to run its monetary policy. Based on it, let's take a look. Actually, I have recorded in detail what happened every time the US CPI was released. This part shows the expected CPI. We don't know the actual CPI yet. What's within these parentheses? It shows the change from the actual CPI of the previous time. The actual CPI of the previous time was 5%. And this time, the forecast is also 5%. Which means we don't expect any decrease. However, the Fed's target is still at 2%. So we still have a long way to go to reach the target. During this period, we expect to maintain the terminal rate for a period of time, then bring CPI down to a normal level, and start the next round of expansionary monetary policy, the loose monetary policy. Let's see how the market reacted to major CPI announcements in the past. On April 12th, for example, the predicted CPI was 5.2, which was lower than the previous CPI. Currently, interest rates are high, so we expect the CPI to improve and the values to decrease. The key is the extent of the decrease. You will notice that in the previous announcement, the decrease was relatively large, 0.8%. The decrease in actual CPI was even larger. It was a 1% drop in actual CPI. Okay, we saw an upward trend in the market following that announcement. Then, in the last announcement, the decrease was only 0.2%, but it matched the predicted CPI. They were exactly the same. And we saw a surge in Bitcoin's price. The retracement after the surge is not our concern. Anyway, there was a price surge after the announcement. Tomorrow, we will be live streaming the CPI announcement at 8:30 p.m. If the actual CPI is higher than the predicted CPI, it won't be good news. However, as we've seen, the market shifted upward despite that. The price went up here too. We can explain why. Because the decrease was just smaller than expected. Not as large as expected. But it did decrease, no matter what. Look at the market before this. Over a year, the CPI decreased. So, the price went up. The same goes for here. It's worth noting that Bitcoin has risen every time following a CPI announcement. All the time. If the CPI drops, the price will go up. This time is different, because the predicted and the previous actual CPI are the same. They have no difference. If the actual CPI is lower than we expected, it is reasonable for the market to rise. However, if it's higher than the forecast, it's hard to say what will happen. If the actual CPI is higher than the expected CPI, the market may not necessarily go down. If we do a chart review, we can learn that even if the actual CPI is higher than the expected CPI, the market may still go up instead of down. However, we did have a decrease this time, which is somewhat unusual compared to the past. We should observe how it compares to the 5%. If it's lower than 5%, there may be a wave of increase. If it's higher than 5%, it may not necessarily decline. Now, from a technical point of view, we are actually having a perfect head and shoulders pattern. I believe many people have noticed this. Let's take a look. For this head and shoulders pattern, we have not yet measured its target price. I know this method may seem a bit cheesy. I believe you know this method. If the head and shoulders pattern is broken, how do we measure the target price? To do this, we measure from here. If we really see a downside breakout, and the price hits this position, I believe this wave of increase is really doomed. Let's look at the support of this trend line. There are contact points at these positions in front. If it stays above here, we can observe how it rebounds. But if this head and shoulders pattern is broken, I would think it's very dangerous. Even if we want to have a bullish trend, where we can trade spots and open long contracts again, it will definitely take time. So, if we want it to be bullish, we certainly do not want it to break below. Let's take a look at the EMA ribbon. Actually, we are already below this EMA ribbon. EMA, as its name suggests, if the price or candlesticks are below this moving average, the moving average will immediately turn downward. Because EMA is a weighted moving average that is very sensitive to market trends, it'll immediately turn downward. However, it takes some time for it to become a bearish formation. I believe that if this bull trend turns into a bearish formation on the daily chart, this trend will basically collapse, right? Why? Let's take a look at this. Of course, I really don't want it to break below this head and shoulders pattern. Because if it does, the moving averages on the daily chart will turn into a bearish pattern. There's a high likelihood that this uptrend will be difficult to continue. Actually, at this point, we can refer to the last bull run to see what happened. Hold on. My computer is running slow. We can refer to the last bull run and see how the moving averages behaved. After the reversal, they formed a bullish pattern, and then the price continued to move higher and higher. And that bull run ended when it turned into a bearish pattern. All right. The bull run ended completely. So basically, this current bull run is just a single bullish pattern on the daily chart level. So, we can see that we're in a precarious situation right now. If we stay at this price level, the moving averages will soon form a bearish pattern. And if the price breaks below this head and shoulders pattern, the situation will be even more severe. We'll undoubtedly enter a bearish market. This small bull wave will face a significant challenge. Lastly, let's examine the changes in the highs and the lows. We can see that the upward trend started here and went through a series of highs and lows. There are no significant highs and lows later on, as there are just some oscillations. Therefore, the most critical position for us to judge the market is here. This position. Where's it? At around 26,527. If this position is broken, the bullish trend on the daily chart will collapse. We must pay close attention to this level. In fact, it's entirely coincident with this support at 27,000. All right, thank you. You're welcome. To like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.